I mean, these geopolitical tensions are not expected to go anywhere, but we have seen already such a run-up when it comes to Japanese and Indian equities. How much further could we go?
Good morning, Shery and Haidi. Good to see you from Hong Kong. I think you raised a good question with respect to valuation. So I would say India is definitely a highly valued market, and while Japanese equities may be fairly valued, I think longer term, they are essentially the markets to be in. And as you brought up, I would say they are definitely benefiting from being the new China with respect to investor interest and where you see both growth and breadth in the marketplace.
But you don't necessarily think that you should leave China altogether, right? Is it a China plus India plus Japan strategy for you?
It's a great question. So we as a long-term investor have a view around all three markets. So China definitely from a valuation perspective has been becoming much more interesting. But the challenge with China tends to be right now is at a macro level, there is a caution. At a micro level, there is a little bit more optimism. I think India, as I said, is highly valued, but longer term, it will continue to be the growth market for investors. And for long-term investors, that is quite intriguing. And then Japan really adds a different dimension for us, which is it is the market with the largest breadth. And definitely recently, the changes with respect to shareholders, with respect to both activism and how they are treating both domestic and international shareholders for someone like us is very, very valuable. We manage over $710 billion globally. And so for us, all three markets have value, but in a different way to our portfolios.
And you present, of course, this coming off another session where we saw NVIDIA driving the bulk of the gains. And you rightly point out there are real risks and opportunities with AI, right? How do you balance those risks in terms of how you potentially invest around them and the visibility over the use cases, not just at this stage, but the next stages as the tech develops?
Absolutely, Heidi. So I think what is different about this cycle with technology and particularly AI at the center of it is this is really a cycle about hardware. And effectively, it's about the ecosystem of hardware, whether you look at the chip companies, but also just the industrial CapEx development that will go around with it. We are a big investor in real estate, so that's certainly an area we think about, which is very different than the prior technology cycle, which was very software-centric. So in our view, it's really important to kind of think about the hardware requirements that the AI cycle is bringing upon us. And if you'd have that lens, going back to your earlier question about Asia, clearly, hardware has been an epicenter of development in Asia. In the prior internet boom, outside of China, there wasn't really a whole lot of software innovation that happened in Asia. But definitely with this cycle, you certainly hear a lot about Taiwan. But if you look at a place like Japan and even Korea, there's a lot more interesting companies that are going to be playing this AI theme.
You talk about the potential inflationary impact that perhaps maybe we are not talking enough about arising from geopolitical uncertainties as well, right? What are you watching out for as we get into November, US elections, but also some of the other uncertainties and geostrategic divergences that we see around the world?
It's a great question. So I would say it's always tough to predict politics, and we certainly don't do that from our seat, but we do pay attention to a lot of macro drivers. And I would say geopolitics is certainly playing into how interest rates are behaving all across the world, certainly from a risk premium perspective. From our seat, we do look at US as our primary core market, and certainly that continues to be, from a growth trajectory, on the right path. Certainly, it has become more important to look beyond the growth companies in the U.S., and we certainly see value there. But to your question on geopolitics, I would say Asia gets a lot of attention, but it is still a very good market to invest in for a growth investor, despite those risks that exist in the marketplace.
And let's talk a little bit more about the U.S. So how do you hedge the elections, and do you have a base case at this point?
Our base case is mostly around what it means for GDP growth and interest rate policy. And our view continues to be, irrespective of the results, I think the growth in U.S., while softening in the short term, is still above trend line and will continue to stay that way, which will certainly drive interest rate policy, which drives a lot of the investor returns in the U.S. marketplace. We're certainly not worried about the impact of elections, certainly on the direction of travel for the U.S. marketplace. And in particular, we are big investors in small cap and mid cap companies in the United States, and I do believe they will certainly benefit as we enter this next cycle over the next 12 to 18 months.
We've heard some economists talk about how if it was up to them, the Fed would just move this month, next week, given that as we get closer to the election, there might be more political risk around a Fed decision around rate cuts. What's your view about what the Fed can do at this point and going into next year?
Our view remains the Fed is fairly independent and will probably stay that way. I think one of the things their challenge remains is they are much more focused on data now. They have been very vocal about their data dependency, and they've expanded the toolkit of the data they are looking at. And the data in U.S. certainly is a little bit mixed. Certain data points would tell you the economy is weakening, and other data points continue to point in the direction of employment still being strong at times. And so I think the Fed's challenge is as they become more data dependent and they continue to look at more and more data points very acutely, they're not getting a clear signal in which direction to move in. So I certainly think that's causing a little bit more volatility in the U.S. markets with respect to where they want to be and what the market is interpreting their actions to be.